Welcome to the Get Real Podcast, your high-octane boost of full-on reality therapy for personal, business, and investing success with your host, Ron Phillips, because somebody's got to tell it like it is.
Hey, everybody. Welcome back to the Get Real Podcast. Ron Phillips here. And, you know, the news feels like I've done like several shows about things in the news, but here we go again. It seems that we've just learned that Warren Buffett made a rather large investment in two of the nation's largest builders, Lennar and D.R. Horton. The number was about $1 billion in both of them. I think 800,000-ish, don't quote me, in Lennar and the rest in D.R. Horton. So the question is, like, what the heck? I mean, why would he do that right now? I mean, the market is not great. I don't think that their stock was down a little bit. I don't think their stock was down like in the toilet. Warren Buffett's not a man who does things without having thought them through and with a lot of diligence and research. Why would he do that when clearly everybody who's watching knows that the real estate market right now is slow? We have the inventory continues to pile up a little bit. Sales are really slow. Home builders like Lennar and D.R. Horton are offering very large incentive packages to move homes, keep their people working. It just seems like, from the outside looking in, if you're trying to figure out what the heck is Warren Buffett doing, without asking him, I'll tell you what I believe is happening. And, I've been saying for quite a while that the market is probably going to flatten or have a slight correction, but there's a lot of levers that could move that in the opposite direction. And that I don't think we're going to have some huge collapse like we did in 2008. The rest of the levers that would make that happen are not in a position where I don't think that's possible. Probable. Anything's possible. And so what is Warren Buffett doing? Warren Buffett is not a guy, like his investment strategy. He's not a guy who's afraid to sit on a boatload of cash for quite a little bit. I think most investment companies out there, cash comes in, they deploy the cash out. But Buffett doesn't do that. So it's not like he was, forced into, investing $1 billion in, something, and he just chose the home building industry. I mean, that's not how Warren Buffett does things. So since he's not afraid to sit on cash, he has to see some kind of upside here. And the upside can't be that the stocks were so in the toilet that he sees that they're going to turn around and make him a ton of money. That can't be it either. Because while they had declined, the percentage that they declined is not, in my opinion, is not sufficient enough that it would warrant that kind of investment. More likely, he sees that the real estate market in general is a good long-term bet. He started to see that. If you guys have been tracking with Buffett and his investments in the real estate space, he created Berkshire Hathaway. That was one play. In 2012, he very famously said, hey, look, if you could figure out the management, I would load up on single family homes. And, enter his company. I think his company's called Capstone. Again, don't quote me. He figured out management, right? I mean, like, he's been investing kind of all along. And here we go again. And I think there's a whole cadre of people out there that are like, hey, look, you got to sit on the sidelines and you can't invest, because if you do that, you're going to lose money when the real estate market collapses. I think if the real estate market was going to collapse like it did in 2008, Warren Buffett probably would have waited too. I think he sees the same thing that most everybody else sees, and that is that we still have a lot of demand. The demand can't buy right now or don't want to buy because interest rates are higher than they perceive that they should be or can afford that they should be. But he also sees, hey, listen, we're still down like 3.5 to 4 million units. They have to be built. Someone's going to have to build them at some point here. This is all going to have to figure itself out. And he's okay being invested in something with a little bit of a dip for a large upside. And I am of the same general opinion that, yeah, if you buy a property right now, today, it may flatline, it may drop just a little bit before it goes back up. But I believe that the upside potential in real estate is substantial still. Some people disagree with me. I think it is. I don't think it's going to get much cheaper than it is right now. I don't think there's going to be this reset to 1975 prices, as much as everybody would love that to happen. I don't think that's happening. All the materials cost more money. The labor is going to continue to cost more because there's not enough labor. And the trades are going to continue to cost more money because there's not enough people doing them. And we have a massive amount of them retiring over the next 10 to 15 years. And there haven't been that many apprentices. There's just not enough people in the trade, which means, again, supply and demand. There's going to be a very huge hole in the supply side, and the demand side is going to continue to be there. So all of those things point to more expensive real estate. And if you look around the world, real estate is relatively inexpensive here in comparison to other countries that are, I almost said comparable, but there's no country that's comparable to ours, but you know what I mean. Not third world. Okay. So first world countries, our real estate is actually pretty inexpensive. Now, these companies, I believe if you actually take a look, and I part of this is my gut. I don't know this, but we do sell for Lennar and D.R. Horton. We sell some of their product in a lot of areas. I think that those companies are smart. They're keeping their people working. They're moving product. They're continuing to build, although their starts are down. Starts just in general are down from new construction. But I think these guys, these bigger companies, one of the reasons that Warren potentially invested in them is because they both have land banking arms that I think are pretty stout, and they have the ability to pick up and start building, to pick up their starts with whatever happens with the real estate market. So, I mean, if the demand increases, the demand that's sitting there, if it increases because interest rates go down, they're ready. They have lots. And I think that's part of Warren's bet. These guys can build. They can crank things up much, much quicker than a lot of other companies can because they have a land banking arm. There's a lot of reasons why I think this is a really, really smart move on Warren's part. And I know that sounds empty. It's Ron Phillips, who's nowhere close to Warren Buffett. Agreeing with Warren Buffett, that's a super easy thing for me to do. But I'm mentioning this because I've been saying something similar for the entire year. And it kind of mirrors what Buffett, not what he said, but what he's doing in the background. So I encourage you guys to think that through. The other thing is, so this is what I've been saying for the past year. It's what Warren Buffett is doing mirrors what I've been saying for the whole year. And that is that the long-term outlook on residential real estate is fantastic. So I encourage you to think about that. Here's the other thing that's in the news, and I think maybe corresponds to what's going on here with Warren Buffett. At least people talk about interest rates. If interest rates get dropped by a quarter, a half a point in September, what does that mean? Well, it means that the builder's cost of capital goes down. It doesn't mean anything with respect to mortgage rates. And it irritates me that pretty much everything in the media, they're talking about mortgage rates and they're talking about the Fed cutting rates. Those two things are not the same thing. They're not even close. As a matter of fact, sometimes when the Fed cuts the rates, the mortgage rates go up. And that's because they're not tied to the Fed funds rate. So if everybody's waiting around for Jerome Powell to cut rates to go out and buy real estate, I think that's a little bit of a fool's errand, because the rates have already come down. I don't know if you guys missed it, but the rates have already come down. And if the Fed drops the rate a quarter of a point or half a point, that doesn't necessarily mean that the mortgage rates are going to come down at all. So I don't remember when it was this year we were supposed to have an interest rate drop. Might have been even towards the end of last year. But I was telling everybody who's waiting for this interest rate drop. And I'm telling everybody that doesn't have anything to do with mortgages. And as soon as the interest rate drop was announced, mortgage rates went up. And that was because the mortgage rates it was already baked in. The interest rates had already gone down in the mortgage world. And I'm not sure that the interest rates are going to come down that much more in the mortgage world. So if they do, great. I've already told you what happens if that happens. If the Fed cuts the rates and, the money that's associated with mortgage rates at the same time correspondingly changes and we have a mortgage rate drop, well, then all it does is means that Warren Buffett is right, because house prices are going to go up. Things are going to start to move. People are going to start to enter the market again. That's what's going to happen. If that doesn't happen, then we're going to ride this flattening out until we get some of this quote unquote excess inventory off the market and supply and demand start to equal out again, which I don't think it's going to take that long because the builders have already pulled back. So if you actually think about the curve of real estate, when the builders start to pull back, well, we've kind of already topped the curve. And so I think what you're going to find is that there's probably going to be a quicker turnaround than people actually realize in the market. And that what we have seen and what we'll see in the next few months is the quote unquote real estate crash. Again, I could be wrong, but that's what the data points to. And so I think that going back to the Buffett thing, I think what Buffett is showing is, listen, I'm investing long term. This is how I do it. This is how I'm going to make it happen. I'm going to invest in these builders because long term, they're going to do really well. And that doesn't mean in the next few months, they're going to do really well. It doesn't even mean maybe into Q1 of next year, they're going to do really well. But at some point, the real estate market is going to make a hard turn. And when it does, those guys, because of their land banking, are going to be able to pick up building and they're going to be able to go great guns. That is why I believe Warren Buffett has invested in those companies. He sees a long-term future for them and for the real estate market. So do with that what you will, but I encourage you to think about it. And I encourage you to get out there. Until next time, make something happen.
This has been the Get Real Podcast. To subscribe and for more information, including a list of all episodes, go to getrealestatesuccess.com.